Well, here we go, another week in the stock market. Can the rally continue and what to look out for going forward this week? There's a few news stories to keep an eye on, as well as some mega earnings once again coming out, and I'll be pointing you to the ones that I'll be keeping an eye on. So here we go. Now, just to let you know, if you are on the Patreon, go check out this earnings review. This is the earnings from last week, the likes of Google, Amazon, Meta, SoFi. We covered them on a Patreon video, which was about 20 minutes long. So if you do want to see exclusive content, the place to be is on the Patreon. Join through the link in the description. It's only £5 a month. And as well as that, if you do want to get some free shares as well, Trading212 are offering free shares. If you join them up to £100, you can join through the link in the description for that. But let's get stuck on to what's going forward this week. So like we were saying last week, another good week in the S&P 500. 2% up last week in the S&P 500. Year to date, 8.17% up. Unbelievable start to the year in the stock market. And the crazy thing was, something like a Google, for example, their earnings were a little bit, they weren't that good, were they? And you looked at the stock and you think, okay, the stock is probably going to be down this week, especially when you consider the weakness that they had on their actual earnings report. And then you look and Google was still 7% up on the week, which is just absolutely crazy. And year to date, it's still up 17%. I mean, I want to buy Google. I want Google to be my largest position in the portfolio. But the issue is, I look at this one now and I'm thinking, it's getting a little bit carried away. I can see people are thinking it's a good opportunity. It's not a bad valuation, and in the longer term, a company like Google, the marketing will recover and it will be a fantastic hold in the next 5 years. But is there just too soon, too much getting priced in that? That's my only little concern when I look at something like a Google. And it's something like an Amazon as well. You know, you look at their earnings this week and you're like, yeah, they're still having a few issues. Amazon Web Services looks a little bit weak. It's the forecast to continue for weakness. And once again, you look at the weak earnings that they had. You know, you look at Friday, it was down 8%. But then you look on the week, it was still up 2%, which is just absolutely crazy. And something like Amazon still up 20% year to date, which is just quite shocking to see, really. And I think the big thing that we enter now this week is that, for me, I look at a lot of the big tech. You look at a lot of the big tech, they didn't come down that much in 2022. A lot of the big tech didn't really crash until them kind of last 12 months. And you look at the valuations for a lot of the S&P 500 large caps now, you know, they're roughly around 18, 17 times earnings. That is about right for what they should be. So I look at a lot of the big tech at the moment, and I look at the likes of Google and Amazon and a lot of the other ones in that S&P 500. I think we're back to fair value in a lot of them companies, which is a little bit awkward now because I don't really want to buy any at fair value. I want to get them cheap. So this is a little bit of an issue that I feel like we've entered recently. I've got to say though, the difference is to like the mid caps. You look at the difference between the mid caps and small caps. You got to remember these companies had really tough 2021s and 2022. You know, a lot of these companies had 12, 18, 24 months of a really tough time, and these stocks in particular got absolutely beaten down in this time. This is why I'm never really an index investor, but I nearly thought, you know what, it totally makes sense to buy the S&P 600 small caps or the Russell 2000 at the moment because they're just way too low. And you look at the difference between the mid caps at the moment. I mean, they're still, you know, quite low down. They're still at the levels or the lowest levels apart from, you know, the 08 crash and the CV times. They're still historically low, and you look at the small caps, they're still historically low. The 08 situation. So I look at these and I think that you've got to look at the market right now and go, okay, the big tech is starting to get a little bit too carried away, I feel, at the moment. I don't think that's showing as much as an opportunity. But without doubt, when you look at some of the small caps and mid caps, I still think some of these are little interesting opportunities at the moment. And they probably the ones that deserve to rally more than these the big caps at the moment. So that's my feelings on just the market and with the run-up that we've had up recently. Getting on to this week, I'm sure you've seen some of the news on the weekend. The so-called China balloon. China have actually come out and said that it wasn't them. So yeah, this is obviously going to be interesting to see how the market reacts to this and how much the media, you know, builds it up. We've seen before that the media can build up tension between China and US, and particularly that can hurt a lot of the Chinese stocks, which have been doing very well recently on the market. So potentially we see some weakness out here, depending on how much more coverage that gets and how much that continues through the week, and how much the media focuses on US and Chinese relations. We could see some weakness there this week, but that's probably the only negative thing at the moment that's kind of come out in the last few days, and potentially could put a little bit of a downturn on the market going forward this week. But apart from that, we'll see how much negativity that causes, and if that continues into the market, and how the market reacts, and if we have a positive week. I think more than probably apart from Monday, we might see some of that news story show a bit of weakness there, but I think the big thing will be earnings. I think once again we'll start picking up earnings, and the market will probably move on how strong these companies are doing on the earnings wise. I think, we saw when Meta came out with strong earnings, they, really lifted the market up, and I think that will probably be key once again. Some of the earnings that are coming this week, some interesting ones for me. Pinterest is unique. Pinterest does not follow the trends of Snapchat and Meta, so we could actually see something interesting from Pinterest. I think they could break the trend, and they could actually come out with really strong earnings. We'll see what happens, but that's what's been happening recently. Now they've got the user growth back, so definitely one to keep an eye on. Activision are reporting, Take-Two are reporting, Skyworks, that's an interesting company, so you guys probably see them in a few hours time. Those are definitely someone to keep an eye on. Tuesday we've got Royal Caribbean, we've got BP. I'm sure they'll follow the trends of what Shell did, and brought out record profit, which is just absolutely unbelievable. That's a topic for another day. Is that a company that I never knew was actually called Jacobs? Must be a really cool company. Will have to be a good one for me to own. Is that one? Enphase I really like, but that's valuation on that company is sky high. So we'll see what happens with them. AAA, not much else on the Tuesday. Wednesday we've got Uber, CVS and Under Armour. Wednesday is an interesting one because we've got Walt Disney. Obviously that's one that I own. I would not mind Walt Disney to becoming a top 3 position in my portfolio. The only problem is it's been on an absolute crazy run at the moment, so that really does need to pull down a little bit before I could actually go buy that one. So if the market doesn't like the Disney Plus numbers like they did last earnings, potentially that could be an opportunity there for a big tech that I think is one of those that, when I was just speaking a bit earlier about valuations and S&P 500, Disney is an example of that. I'm a big fan of Disney, but that's just been on too much of a run where I can't buy anymore, and I would like to get it cheaper, so we'll see what happens there. Affirma reporting earnings, Digital Turbine, Robinhood, MGM, I'll be interested in them just for the numbers for a bit of DraftKings, but they're not reporting. DraftKings aren't reporting until next week, so that's probably like my Super Bowl next week. After this one, we've got the likes of Hims and DraftKings, so that's what I'm going to be looking forward to most. So only 7 more days until that one, but we've got this one to go through this week. Thursday, PepsiCo, company I like, but just crazy valuations. AbbVie, Canopy Growth. This is the big one that I'm looking forward to this week. PayPal. See how they're doing, get some guidance on what's going on there. Same again, the valuation isn't too bad, but if we could have a little bit of a drop, that would be absolutely perfect. Ideally, the perfect situation is always to have a drop on good numbers, so I'll be definitely checking them out. Cloudflare, Lyft, Expedia, and not too much other ones on there that are going to be reporting earnings. These are a couple of companies that I own that are not on this list. This is just the most anticipated earnings that are going forward. One company that's not on this list that I own that I'd be really interested to see is this company, Topgolf Callaway. Now, you guys might know this is about a mid-sized position in my portfolio, and it's a company that has had a really good 2021, and then it also had 2022 has actually been amazing as well. So it's had 2 really good years, but the share price has basically been flat since I've owned it, and it's a bit frustrating because it's one of those companies that has been caught up in the bear market, and the valuation's been going down, but yet you look at the financials of the business and it's just been going up and up and up. It's had a bit of a pop up on the share price recently, but I still think it should be a lot higher than what it is at the moment. Obviously, Topgolf Callaway obviously own the top golf locations, but also own a probably the number 1 golfing brand out there, Callaway, which is just an absolute perfect combination. And the reason why I'm really looking forward to this one this week, and I just wanted to mention it, is because this quarter in particular is going to be interesting, because actually a lot of the top golf venues didn't open in 2022 until actually Q3 and Q4. So really, the Callaway Topgolf numbers this year, even though they've financially been doing absolutely amazing, a lot of the growth has been driven from already open venues. We've had no new venues, but we've had a couple, but not loads. But there's going to be a lot in this quarter. So it'd be really interesting to see what they do generate. And then also really good to see what they forecast towards the end of the year. And that's actually quite clear when you actually look inside what the analysts are forecasting. For example, if you just take the EPS side of it, so the average EPS is negative 1.6. But if you look at the low side, negative 0.22, and on the high side, it's a positive 0.04. So you can see here there's nearly a 20 difference, 0.2 difference between the EPS, which is a massive range for a company like this. And people don't know what they're going to generate from the profit side of it with all the new venues that are going to be coming up. Also, you look at the revenue estimates, there's nearly a 40 million difference between the low estimate and the high estimate on revenue. So you can see here there's a massive unknown here what they're going to actually report. But you can see here for this current quarter they're expecting 18% year-over-year growth, and obviously that's going to be massively driven by the new venues. And also be key to get the forecast on what they're expecting into 2023. Once again, you can see here the EPS is 0.64 on the low side and $1.01 on the high side. Once again, massive ranges given on the EPS. And you can see on the revenue side of it, they're currently forecasting bang on 10% sales growth going forward. And there isn't too much variation, as you can see here, from that point of view. So this is a really interesting one because there's a lot of unknown here because they've just opened up so many new venues in this quarter that no one knows what numbers they're going to come out with, and then what guidance they're going to give for the year, which is going to be super interesting to see what they're going to say and venues opening and everything like that. Bit of the unknown. So this is one that I'm looking forward to because I think that it could be one of those that shocks the market, hopefully in the positive way, but because there's so much surprise there, we'll see what happens. But this is a company that I never really give much attention on the channel, and probably one of the reasons why is that sometimes the downside of making YouTube videos is that you've kind of got to talk about the stocks that are very popular. If I put a stock out there talking about Topgolf Callaway, it'd probably get 1/10 of the views if I talked about DraftKings or HIMS, because they are stocks that are very liked and followed. So I always feel a bit bad for this one because I think this is a company that I own that I'm really excited about, and I feel like it's a company that's done amazing the last 2 years, and it hasn't had the reflection on the share price, and it should do because it's done amazing. So that's another one that I'm looking forward to this week anyway. So that's just a few things to be looking out for going forward. No inflation data this week. We do have inflation data the week after, so that'll be interesting when it gets to that week. The combination of inflation data, HIMS earnings and DraftKings earnings is that's going to be an absolute crazy one. But yeah, this is just a few things to keep an eye on going forward this week. Anyway, guys, hope you enjoyed it. Hit the like button and subscribe if you're new around here, and I'll catch you in a bit.